to the webinar today. And today we are talking about, it's Monday. So it's Mindset Monday, and we'll talk about crashing market, how to prosper and thrive. So I want to kind of go into a little bit of a I guess, give you a little bit backstory, what we're going to talk about today. So last week, I was at a conference, and I was at a conference which was specifically for people who do a very, very, very high volume of wholesale deals, right? And so I was on the conference that weekend, last week. And the reason I went to the conference was that I wanted to kind of keep a tab on where the market was as it relates to wholesales. Last 2 years, wholesalers were absolutely killing it because the market was absolutely obscene throughout the country. So I wanted to kind of look at what were the numbers looking like, what is going on in the marketplace as it relates to wholesale, and it'll relate to today's discussion, which is thriving, basically prospering in a crashing market, right? Because a lot of news that you may have heard if you turn to YouTube University, right, which is the know-all basis. Here's something important before we get into that. Like, YouTube is a great, great, great source for a ton of information. The problem is this: what you don't know, it's not just about information, right? If you want to succeed in life, it is not just about information. It is about information with context around the information, right? Meaning, what context do I place that information, and am I getting the right information, right? Today, you hear the word fake news all the time. What does that mean? That we don't know, because just because so many people say it, right? So many people just said, oh my God, the place to invest was FTX and then FTT tokens and blah, blah, all this stuff, right? Well, just because everybody else was doing something, right, that's why everybody else jumped on that bandwagon, and we know where we are with that whole mess, right? So it's important to understand that if you look at, and I'm saying this because if today you turn to YouTube and you're one of those people who pays attention to anything that is going on in the marketplace, what you'll notice is every influencer, everybody that talks about real estate is going to make a video about, oh my God, the crashing real estate market for 2023. In fact, we have made videos like that. Well, why? Right? The reason why we have made videos like that is because that's what people will click on, and then you have to start the video there and then try to put logic. Why? Because the algorithm for YouTube is going to, that's what becomes, it's almost like clickbait. It's clickbait whenever you put a certain thing and then basically it's completely false information. This is not kind of what it is, but sometimes you have to start there with almost a negative connotation to get people to understand the logic. And I say that to say this, that if you look at the country as a whole, interest rates went from let's say you look at a home that you lived in. If you were getting a loan on a home you lived in, you were at 3.5%, 2.75, and then you came about 3.2. Today, you're well at 6.5, 6.7. If you're doing a commercial refi, you're at 7.7. If you buy down the road rate, otherwise you're at 8.125, depending on where you are, right? So you're almost double to 2.5 times of where we were. Now, what we would like to say is the instant thing is, oh my God, the market is crashing. Well, is that the reality today? Right? Yes. Are there a significant amount of price reductions in the market? 110%, right? But yet, what we have to look at is, so this is kind of what happened. This is where the market was pre-corona, right? And in general trend, the trend was going up. And then when corona happened, we had this dip, and then suddenly we had this. So when you had this sort of a thing happen, meaning the market jumped up, right? This jump was highly, highly, highly abnormal, right? So this is somewhere where the norm line is. And suddenly that line kind of becomes something like this, right? That is not realistic to begin with. So when we start again coming down and readjusting to where the norm should be, right? In a normal market where prices, that is not necessarily a crash. I know every real estate YouTuber, that's what they want to say. Why? Because that gets a lot of views. I'm saying that to say this, that even today, we said crashing market mindset, meaning because that's the mindset that most people have. And this is important to understand because if you are somebody that is a homeowner in today's market, what happens is this: if you bought a property, say, middle of last year, well, you probably were at the high end of the market, or even, end of last year, you were probably at the high end of the market. So let's say you paid 400,000 for a property. Well, today, depending on where it was, if it was generally in an A suburb, right, and the property is not in really nice condition, meaning it's not an updated type of a property. It doesn't have to be a perfect property, but a property that is an updated type of property. If you probably sell it today, maybe it may sell for 410, 415. Well, but if you sell the property for 410, 415, what's going to happen? Right? You pay your agent, I don't know, 5%, 6%, whatever you pay the agent, right? And then you have a title company involved, attorney, selling expenses, maybe there is some sort of a city tax, whatever the case may be, right? So let's say you have a 6% cost of sales or 7% cost of sales. Well, if you have 7% total cost of sale, right, 7 times 4. So 7 times 4 is 7 times 3 is 21. So 4, that's going to be $28,000. It's going to cost you to sell. And then from last year to this year, even though the price may be around 410, 415, it's stuck there, or it may even be right at 405, 406, or maybe a little bit lower than where it was last year, right, at this time or beginning of the year. Now what's going to happen is suddenly, when you sell the property, you're going to end up taking a little bit of a loss. Now, the loss is going to depend on the market that you're in, meaning if you are in a suburb generally, or a pocket of town generally, your relative loss is going to be depending on where you ended up buying it, how crazy the market was. So say if you were in Denver, if you were in parts of Phoenix, if you're in parts of Vegas, if you're in other parts of country that were just obscene, and suddenly the market has cooled down. What had happened was this thing had just gone absolutely wacko. And now that's coming in line. So now people are, oh my God, people are losing money, people lose. Okay. Are they really losing money? Yes. Is there some sort of a loss? Well, of course. That's called normal. I buy a property in a normal market here, right, where it's kind of goes up a little bit. General trend is up. So if you sell a house within a year, you're of course going to lose money. Right? Why? Because there's a transactional cost to it. And I say that because somehow what we're led to believe that somehow that is a bad thing. No. That is called normal. Meaning, let's just say if I buy anything, right? There's a cost for doing business. And then if I have to sell it within a short period of time, I haven't really gotten my use out of it, right? This crazy notion that real estate always goes up. Right? There's this crazy notion that we have been led to believe. And that is a false notion. That is a 100% false notion that real estate always goes up. Real estate does not always goes up. There are times in history where real estate is stagnant. There are times in history where real estate has gone down. We saw that with 2008 through 2012, right? But yet, what are we supposed to believe? And so what happens is this: if you're a regular homeowner, right? Like if I bought a house for me to live in and I paid a retail price for it, of course, I'm going to lose a little bit of money because of the friction in the transaction, meaning there are going to be costs for buying, there are going to be costs when I'm going to sell the property, so on and so forth. Now, here's the important thing. If I bought the property at a discount, right? As an investor, I would buy the property at a 20, 30, 40% discount, right? Then if I bring the property, do some work to it, meaning increase value by doing some work to it, and then I go to sell it, am I going to lose money? No. If I had bought it at enough discount, and that enough discount is going to depend on what market you're in, what's going to happen is you may not make as much, but you should not be losing as much, right? Because you bought it at a discount to begin with. So this idea, this notion that we had, that so far, like if we look at 2022, as I speak about it, this is December the 12th that I'm recording this, right? Across the country, so far, right, there are no humongous losses. Now, mind you, this is relative, right? So on a 400,000 property, if you have to sell the property within less than a year or within a year, and you have to take a $20,000 haircut, that's not called a loss. In all reality, that's just called cost of doing business, and you haven't lived in the property long enough, right? Now, if you had sold this property in January and you bought it last January, boom, the price went up, and you suddenly look like a genius. It's like, oh my God, I'm smart. No, you were not any smarter, right? All that happened was the market carried you. So that's not called smart or dumb. That's just how things work, right? And this is what I want you to realize is that for a homeowner that has to sell within a period of time, you overpaid for the property because there were just too many people in the marketplace. You're probably, if you have to sell, you're probably going to take a little bit of a shaving. You're going to take a haircut. If you can't afford that, you should not have bought the property in the first place. And I'm probably going to make some people mad when I say this, but guys, listen, then you you could not afford that home. Right? Just because something is out there, just because you desire to do something, right? And then you do it, well, then you have to be ready for the consequence, right? We all have to. You buy a super expensive exotic car, right? Suddenly something breaks down and it's exorbitantly crazy amount of money. Then you complain, well, oh my God, this is crazy. This doesn't make any sense. No. You should have known that, or you may not have had to know it, but you clearly ignored the fact that it's going to be ridiculous, right? Give you an example. On the Bentley, a couple of months ago, 2-3 months ago, I had to do the front, whatever, the engine mounts, it's called, like active engine mounts and a brake job on the front things. So the cost of it for a brake job on the front rotors or whatever, and the engine mounts, I ended up paying $14,000. Now, some of you will look at it and go, Andrew, that is stupid, right? Well, clearly, I realize it is stupid. But then I bought a stupidly expensive car. So I can't blame anybody else for it. I can't blame the market for it. I can't say they're price gouging. Why? Because I chose to make that decision. So as an adult, I have to take responsibility that how much it costs. If you buy a $500,000, $600,000 house, or if you buy a $100,000 or $150,000 house, and then you have to sell it for certain circumstances that happen in the market, then guess what? You can't blame the outside factors. So why am I talking about this? But if you're an investor and you bought the property at a good discount, then what's going to happen? You should not have to lose any money, because if you look at the statistics today, yes, is the market crashing? 100%. But it's crashing because it went straight up like this in 2021 and 2022, which is not realistic in a normal market, right? Because a big event like Corona happened, hence it is crashing, which is it needs to come down to reality. We cannot keep going at the rate at which we were going. Now, how do you prosper in today's market, right? That's the discussion that we need to have today, because this was something. So what needs to happen is this. If you're looking at the market today, there are going to be two types of people. People are going to say, well, Andrew, the market is crashing. Why would I want to invest? Right? Well, when would you rather invest? Would you rather invest when there's a huge amount of demand and then people keep asking for ridiculous more prices? Do you think the sellers are going to be more excited at that time of selling you the property? See, today, what's going to happen is this. People who are going to sell are people who have to sell. People who have to sell are the ones that are going to give you the best deals. It's that simple. Right? So guess who you're going to do your marketing to? And I relate this back to the example that I was giving. So last week when I was at this particular mastermind, right, what everybody was saying was the wholesale business is changing. The wholesale business is taking a huge turn. And guess what? If we made X amount of dollars, wholesalers last last year who made $500,000-$600,000 in profit. Think about this: $500,000-$600,000 in profit, right? This year they're taking a $200,000 or $300,000 bloodbath every quarter in terms of losing money, right? Can you imagine that? Having a business that is that out of control. And these are not stupid people, right? Anybody who does that many wholesales, who can do that much business, clearly if the numbers are off, why? What has happened? So in the last couple of years, what had happened was a lot of wholesalers, there are big wholesalers we're talking about. We're not talking about somebody doing 2, 3, 4 wholesales. We're talking about people who are doing 60, 70, 100, 200, 300 transactions a year. What happened?
It's this thing here.
Who are doing that many transactions a year, right? They are feeling the pinch. Why? Because a month they may have 60, 80, 100, 120, $200,000 in marketing budgets. And like anybody else, right? If it was your business or my business and you scaled up from a 2, 4, 10, 15, 20, 30, 40, 200, now suddenly you have people on payroll, you have all this stuff, and you feel responsible as an employer to have that much staff. Now, not only do you have to, it's a huge ego adjustment that I suddenly got to cut my budgets from this higher budget to and I'm going to probably have to lay off people. I'm not talking about me. I'm talking about people who find themselves in that position, right? So what's happening is the market is changing because why? So in a lot of markets, like the D markets, meaning a disaster market, versus an A market, which is an aspirational market, your people who were selling a lot of properties in the D markets, suddenly those properties are not selling. Why? Because if you're so there's A market, which is aspirational, B is bread and butter, C is markets with some challenges, and D market is a market where it's a disaster, right? So in markets that are D markets and markets that are C markets, meaning these are first-time FHA buyers, what's happening in those markets is people are having a hard time qualifying because their payment was going to be barely $900 to maybe $1,100. They could afford that. Today, their payment is $1,500, right? That $300 or $400 jump is not something that they can afford. Financially, they're not going to qualify. Now, if somebody's going to buy a $400,000 or $500,000 house, okay, well, in most parts of the country, you can get a pretty sizable house in most of the country, barring some of the very hottest areas, a pretty decent sized house for $400,000 or $500,000. For them, okay, I'm not going to buy a $500,000 house. Maybe I'll buy only a $450,000, right? Or I'm going to buy a $400,000. That's not something that is a need. That is a want. So what I'm trying to say is this: what markets get the most affected? It's the C and the D markets get the most affected. Markets that are A, markets that are B are not affected. This is an interesting thing. I was having a discussion with a friend of mine, happens to be selling properties in the Beverly Hills market, right? Now, Beverly Hills market, of course, is an obscenely high market. He's like, man, our market is basically, most of it is all cash transactions, right? A lot of the market is cash transactions, and we're talking about the ultra rich market, right? He's like, that market, it doesn't cash flow, it doesn't do anything, right? You're buying a house, $20-30 million house, because you want to buy it. You want to be in that particular market. That's not most of the country, though. Yet, people who are in the A market, so a $400,000, $500,000, $600,000 house in A market, today, has that been affected? Yes, a little bit. It's been affected, 3%, 4%, 5%, maybe. But still, the demand in that market is very strong. So generally in that market, if we start seeing a bunch of foreclosures, which we're not seeing that, right? We're not seeing, in fact, the foreclosures today, even in a market like Chicago, right? Where we have a lot of foreclosures compared to the rest of the country. Because a market like Chicago, we have a lot of people that are upside down in their payments, right? Still, the relative numbers, and now what is relative? I'm talking about relative for me is always going to be 2008 through 2012. Why? Because I'm a child of that era, meaning that's when I started investing, right? So when I think about, oh my God, a market crash, I always go back to that era because that's when we saw a severe market correction, right? Today, we're not seeing that. So if the prices come down by 10 or 15%, that's not a market crash. That's just a normal adjustment which needs to happen. Now, does that mean some people are going to lose money? Of course. Does that mean some people are going to have job losses because of the tempering of the economy, which had been crazy? Of course, right? But what that is going to do is this. For you and I as real estate investors, what that does is that provides an opportunity. So what I mean by that is this, that last year, if a property is listed for say $350,000 and you go in and you offer 325, right? I mean, people are going to laugh at you, right? They're going to laugh at you because there are other 15 offers that are at list price or above, right? So people were not as apt to talk to you. Today, you go in and make an offer, like I'm making offers. I just made an offer on a property at 250. Right? Seller's like, well, I'm not going to come down anything below 315. Like, okay, I'm sorry, but I just can't afford to pay that because the property is not worth it on the back end. On the back end, the property is worth about $400,000 all fixed up. If I pay $315 for the property, put $70,000 into fixing it, I'm at retail price. Why would I want to do that? So my point today is this, that just as wholesalers are having to adjust, so people who are doing wholesaling in the D markets, they need to pull all their budgets out of the D markets or minimize the spending in those markets. Why? Because the number of buyers that were buying in that market have dried up tremendously. Now, that doesn't mean that there are not some sales, of course, right? There's no such thing. There's always somebody making money somewhere. The question is, where's the market? C and D markets were some of the biggest places where wholesalers were making a buttload of money in the last couple of years. Now that market's going to come up to a C market, solid market, which has some challenges, and a market which is a B bread and butter market. But for us, in terms of making offers, what has to happen is, so how do you prosper? Well, today you prosper on properties that have higher equities in them. Right? Today, you prosper on properties where there are people that have to sell, meaning they're going to go into foreclosure if they don't sell the property, or they're already in foreclosure, meaning short sales. Now, I just got done saying that, hey, the number of foreclosures is not that high, which is true. But guess what happens as the market cools down? What happens is, who are the first people that disappear? Well, it's the wannabe investors. It's the new investors who have been in the market for the last couple of years. They were multimillionaires on paper, supposedly, right? Because they're buying a flip, selling a property, making 60, 70, 80, 100 grand. And guess what happened? The market changed, right? Today, there's more opportunity for you. Why? Because relative to the number of people investing, the number of deals that are available is higher, right? That's important, right? Relative to the number of people investing, the number of deals that are available are higher. Why? Because today you can make offers on properties at deep discounts, right? Today, there are more people that are willing to give you some sort of owner finance, do a little bit more creative financing, that would have never considered this last year, right? They would have laughed you out of the door. They're like, you're crazy. I got 8 other investors, man, that are following you, that are willing to make ridiculous. I mean, I lost a lot of properties in the last couple of years where I just wouldn't pay that high a price, right? And sometimes I was wrong because I didn't predict that the market would go up as high as it would. But I would rather buy less and be right more than I would be wrong, right? That's just me. So this is important to understand that in today's market, we need to double down. What do I mean by that is this, that any property that comes to the market that has a potential, whether it be MLS, whether it's a property that's going to auction, whether it's a property that is a short sale, whether it's a property that's a probate property, but go after properties where people have to sell, right? Because if they don't have to sell, and a lot of people are not going to bring money to the table, meaning if somebody doesn't have high motivation and they owe 95% of the property ARV on the loan, right? And they come to closing, they have to pay agent costs, they have to pay other costs. Why are they going to sell? They're not going to sell. They're not going to give you a discount because if they're not forced to sell in today's market, they're not going to sell. Today, more than ever, what we have to look at is motivation. Are people motivated? And sometimes people are not going to tell you, oh, I'm motivated, right? They're going to say, oh, no, I'm going to wait, right? But today, the properties we need to, so used to be that you'd make offers on properties that are brand new on the market. Boom, as soon as it comes on the market, I'm going to submit an offer because somebody else is going to be in line. Today, it's opposite. Go make offers on properties that have been sitting on the market 30 days, 40 days, 50 days, 60 days, 70 days, 80 days, and then the offer that you make, even if that offer is 20%, 25%, 30% less than the list price, people are not going to laugh at you. And people, if they are laughing at you, they're you're crazy, right? Guess what? 30 days from now, they're still going to be on the market, right? 40 days from now, they're still going to be on the market. And in the dead of winter, if you're in the cold part of the country, guess what's going to happen? They're going to sell the property to you because they have no other choice, right? So when the market is coming down and a 10% price adjustment today is called a crash. Well, not when the property prices have gone up 20, 25% in a lot of the markets. That is not a crash, guys. That is just called we're coming back to a reality. Yet what's happening is this, that a lot of the forces in the market, especially the YouTubers, especially if you're on any social media, unless you're bombastic, unless you say something which is just crazy, guess what? You're not going to get attention. Hence, everything is said, oh my God, everything's going to hell in a handbasket. Or, oh my God, everybody's making money and you're not, right? Because that is the type of stuff we all hear, right? We don't hear things that are sensible and things that are practical. So as a real estate investor today, you have one of the greatest opportunities again to get in. If you're brand new, guys, today is the time to start doubling down. Start paying attention to real estate again. Why? Because tumultuous waters is what creates a tremendous opportunity, right? I'm buying more than I have bought in the last, I have, I think, 22 transactions or so going on as we speak. Personally, for me, this is not anybody else, just my own transactions, right? And so the question is, what about you, right? Are you paying attention to the market? If you're not, now is the time, right? Now is the time to double down. And anything that doesn't make sense for you, just wholesale it out. Even if you get a smaller fee on the wholesale, just wholesale that sucker out. Don't get yourself into long-term flips, meaning do not go out and do big flips right now. This is not the time, this is not the moment in history when you're going to do long-term flips, because you don't know where the market's going to be 8, 9, 10 months from now, right? So it's really, really, really important that you do not go out there and start doing anything that is very risky. You need to be very risk adverse in today's market. And I promise you, you will be grateful, because next year you're going to see even more price drops coming. But they're not going to be, at least from all the statistics we're looking at, none of the statistics, at least so far. Now, mind you, things can change, right? We saw with Corona what happened. Within a month, everything shut down. So it's not, I'm not saying that I can see the future, but at least based on the stats, based on the numbers, the market is coming down, and you as an investor can be in a tremendous situation if you're willing to go out and make offers at prices that make sense. And today, lowball offers are being considered. We're finding properties even today at numbers that are 50% off ARV. So hopefully this makes sense. Today was Mindset Monday. We will talk to you and see you on Wednesday. If you don't know, please join, bring your friends on to Burr Cashflow Investors. As you guys know, a couple of weeks ago, we gave the first prize away to somebody, to anybody that joins. You get drawn into an entry. And if you invite a bunch of friends, right, you get, for each person that you invite to join the group, be a part of the community, to learn and grow together, right, you get drawn into a prize. The last prize was a full set of appliances, stainless steel appliances. So it was a refrigerator, it was a stove, it was a oven, it was a microwave, and dishwasher. So we had a winner. This time it's a cruise for a couple. So you and your spouse or significant other, we're going to send you on a cruise. Invite your friends and let's make it happen. Talk to you guys soon.